this thing.
What do you think?
Recording started. Recording began.
Look at this. Now he's got to be serious. I mean, look, this is serious, Jeremy. He sees Andrew pushes the button, and look.
I know what happened. I'm trying to force my testosterone to grow a beard real quick. So
You look good, man. The intro, Jeremy Padawer. We've had him on before, some of our most successful episodes. The guy does a little bit of everything. It makes for a real fun episode. I have no idea where this is going to go. I'm going to do my best to avoid Andrew's path. He likes to take me down a path, and I like to take the guests like around the path, off the path, into the neighbor's yard. I go all over the place.
Interestingly, Jeremy reached out to us on Twitter, which you guys should be following us on Twitter because we're doing a better job with that. Please follow us. And he said, we need to do a part 3.
Oh, yeah.
So what do you have in mind for a part 3, a trilogy?
I'm going to tell you part 3. I have to say a humongous thank you to this man, right? Yeah? Because, no, I'm being dead serious. I don't follow that many people on Twitter. I probably should follow more, but I follow you. I follow, enough folks who say enough things. And let me say this. You obviously have bags. You obviously have things you own, right? Yes. You do. You have cards you own. You have assets you own. You have invested in some of the more obscure asset classes, you name it. There are other people with similar amounts of followers, maybe people with more, maybe people with slightly less, but I put in the same basket as you. Market movers, let's call it, right? I have never seen you completely crap on somebody else's assets, somebody else's choice, somebody else's investment strategy in favor of yours. And more importantly, why we have to thank you is you're honest about your own stuff. If something didn't go the right way, if there's some kind of price that's sure, you bought a Harry Potter book, another one came out, you wanted to talk about how yours was nicer, completely reasonable. But if it's sold for less, I would bet my house that you wouldn't come on the next day and say, people are assholes, they're morons, they don't understand the value proposition of this book. You'd probably do an analysis of it, you'd be thoughtful of it, and we need more of that in the world, right? Because I got to tell you something. You don't make your light brighter by turning someone else's off, right? I tell Andrew this all the time. I said, I'm going to wake up, the sun is going to be on my face, and this flower is going to bloom the best that it can, and I'm not going to give a shit about the flowers to my left and to my right. Let them bloom on their own because they are not going to have anything to do with what I'm doing. If they're growing, great, we could all grow together. If they're growing shitty, let me see if I can help them, but I'm not going to laugh at them and shit on them the whole deal. Why do I say this?
But by the way,
shoot. Go ahead.
I was going to say, I mean, that might actually benefit them. Fertilizer is good for other flowers. So.
100% right. There are people, I was just reading, so I'm a little fired up coming into this episode. And I'm happy that it's with you because it's more grounding. But I'm reading, it's a crypto market now, right? And I'm not heavily invested in crypto. I could give a crap. A couple months I couldn't spell Bitcoin, right? That's But obviously, for the last couple of days, there's been a little bit of a market correction. Hell, the damn Dow was down 1,000 points at one point today. It's not just a correction in the crypto world, the whole deal. But I happen to read some posts of one particular person who also invests in his own type of obscure things, but shits on crypto. Okay, It's funny because I almost replied, and I'm like, you know what? I'm just going to go on and I'm going to have fun with Jeremy instead. Yes. And I didn't hit reply. I don't care because who cares about my what am I going to get 2 people who see mine? Who cares about that? My reply is stupid. But it's not right to say, hey, let's talk about crypto when it's up and when it's down. When your account literally has never talked about it when it is up. You only talk about it when it's down. And you want to say something like, hey, Dick Boy Roy, when the bubbles burst on fucking tickets, right? When people realize that ticket stubs can't just go straight up and that you're hoarding them and pumping your own bags, pal. Do you want people to come out of the woodwork and be like, woo, oh, wow, let's talk about tickets when they're up and when they're down. Yeah, no, yeah. Anyway, just
legendary rant.
I'm sorry, man, but
like
Jeremy doesn't do this. That's why I like this guy.
No, I'm ready. I'm ready to do this.
Look, you're not a CryptoPunk guy, right? But you tweeted famously in the last couple of days. You said, "Hey, you know what? I wasn't somebody who wanted to invest in these things. It wasn't something I was looking at, but it's something that I now will look at because of the changes in the market conditions. This is something that was a $500,000 floor, and now because of changes, because of a bunch of things, you can buy it for less than $200,000. 2017 is the OG on these cryptos, these things. That's what you invest in. You invest in those original things, the first things. So now this has now become something where you're going to give. Maybe you don't buy it, but at least your thought process is let's give this a real analysis, even though it's not a place or a space that I was looking at before. Right, that's good. We need more of that.
Well, I will tell you this: a few things. Number one, thank you.
You're welcome.
Glad to be here. Number two, that was highly enjoyable.
Good. This is why people don't only listen to us.
Yes, it was the whole thing, the beginning, the middle, and the end. There was no down. It was I was glued to the situation.
Love it.
And third, look, I don't crap on other people's thoughts and opinions.
Yeah.
Generally, unless it's Skip Bayless, and then I particular dislike for the way he communicates on social media. But other than that guy, I mean, essentially, here's my mindset. Okay, I'm open to perspective. It's the reason why I'm more of a moderate in terms of my own even political beliefs. I'm just open to hearing people out and understanding why they feel the way they feel, and it'll help shape my own opinion. And sometimes I'll keep my opinion to myself, depending on the category and depending whether I feel like I have a special insider knowledge of my own that I can really help shape the ecosystem. Now, when it comes to crypto, it's an interesting time because crypto has now achieved a total market cap where, God forbid anything terrible happens, it can actually affect broader global economies. And I'll give you an example. So the crypto market 2.5 months ago hit a peak of $3 trillion. Okay. And that $3 trillion is a lot, right? So if you look at Bitcoin, Ethereum, and everything else, you're at 3 trillion. But if you look and see what's happened in the last 2 months, and really maybe hitting a low today, crypto bottomed out at about 1.5 trillion today, which means that crypto had a loss of 1.5 trillion in the last 2 months. Now, putting that into historical perspective, the stock market bubble from 2000 2002 and the housing market bubble in 2007 to 2009, there was around $6 trillion in total wealth lost in both of those occasions. So we're talking about $1.5 trillion in 2 months versus $6 trillion in 2 years. And we know the impact that $6 trillion had.
Yeah, that was too big to fail, man. That was Bear Stearns. That was crazy.
On the global market. So putting it all in perspective, whether you take crypto seriously or not, at this point in time, there's so much money in crypto that if crypto takes a big fall, like it just recently did, it affects global markets because of the total wealth lost. And that's why, whether you take crypto seriously or not, you have to take the impact that crypto has on wealth seriously.
Yep.
Because when it's pumping, people are feeling pretty damn good. And look, like I said, $3 trillion in the system is no joke. And when it's dumping, it can make people feel pretty negative about a lot of things. And that impact can cause waves in all kinds of sectors, including physical collectibles, real estate, stocks, and everything else. So what I tell people is diversify. Physical collectibles, digital collectibles, stocks, bonds, real estate, diversify. And then if one segment of the market is down, you don't have to crap on other people because you're kind of in a lot of segments of the market. If you don't diversify and one area takes a big bump, you might be the one taking the bump straight directly on your head. And that's just the reality of why I don't spend a lot of time taking a a piss out of somebody else's stuff because I'm pretty widely diversified myself.
Yeah, you're in a bit of everything, which is great.
A little bit of everything.
So there's a few different ways we could go, but let's assume the person on the other end of this is a card collector or an investor, right?
Yeah.
Is because you're diversified why you don't really feel right? A lot of investing and collecting is that you get the angst of selling, right? When you see things go down, you kind of get nervous and panic and you sell into that. And the reverse is true. When things go up, you FOMO in. Is being diversified, is that what allows you to kind of ride these ebbs and flows? Like, are you concerned? Do you get concerned and you like panic sell? Has that happened?
Yes to everything you just said. Yes, it helps me through the ebbs and flows, being someone who's diversified into a lot of different asset classes. And yes, I panic too. And yes, I feel very unsettled when I see a lot of things down at once and you see red across the board. But what I do realize is fundamentally, when you look at the last 50 years, and I'm 48 years old. So let's just say that my investment horizon is 20 years. And 20 years from now, I want to be in very safe assets when I'm entering into my late 60s. I know that if you take any 20-year period in history and you look at where you began and where you ended during that 20-year period, you're generally on the positive end. Now, you could probably find a few times, but you're talking about a few times out of the vast majority of times. And when I look at the stock market today, for instance, what I will tell you is the greatest bubble of the stock market, the price earnings ratios, meaning the amount that stocks were priced at versus the profits, were about 120 times. And today they're around 30 times. And the historical average is maybe between 15 and 25. So I don't know. I just know a little bit about a lot of things. And I know enough to know if I'm diversified and if I look at most asset classes and I have a little bit here and there and I'm not overly penetrated in anything, then I'm probably going to be okay. And that does help me. But no, I've had my moments. I'll be honest with you. At the beginning of COVID, I pulled almost all of my money out of the stock market after it went from like 28 to 20. Okay. And it was a costly loss. And then the market went all the way up to 30 plus, and I was barely participating. And yeah, that was probably not my best move. But when you have a new risk like COVID, it's really, really hard to predict what something like that means. And I think what we saw is the government printed a lot of money and it fueled the crypto people. They felt really, really good about it because they could point to, hey, it's an unlimited cap. The government can do whatever they want. They can print as much as they want. And, they have a point.
I have one more question, Cage. I'm going to go to Jeremy, and I want to hear your take on this because I think you're going to have some interesting things to say. And it actually kind of got stemmed by what you said, Jeremy. I feel like since COVID and since they printed this money, a lot of the assets that have gone up have been very narrative driven, right? In the sense that the people that own the best stuff keep telling you why what they own is the best stuff and why the next thing that they buy is going to be that next thing.
Yeah.
So like what's been difficult and a learning experience is how to really analyze fundamentals versus narrative in these, I'm talking mostly NFTs and cards.
Yeah.
Any thoughts on that, Cage? I can't wait to hear this after as well.
Yeah. Well, here's the thing. I think what people need to realize about NFTs is that NFTs are not really necessarily at all about the quality of the underlying art. It's about the quality of the community. And a lot of these are like country clubs where there's a promise of inclusion if you are part of that particular country club. And collectibles and community have always kind of gone together. I mean, you could see it with Pokemon, and you look at the message boards and people are very tied together and they're talking about the things that they're interested in. And then they start talking about other things. And then maybe they have insight on other things that they could do. And sports cards have the same thing to the extent that people that are engaged with it tend to know the same people and have the same interests. And these NFTs in a time where A lot of folks are still dealing with 2 years of pandemic and staying at home, or working in environments where they're around far fewer people, are very, very in need of a community. And NFTs have allowed a lot of folks to have a profitable situation, but also be part of something, and then to really believe in something and to really support it. And the truth is, if you look at the underlying value of an NFT, the truth is that there are some of these programs that will have real serious longevity, and the vast majority will burn to nothing. But that is an opinion, and that is not a fact. Now, I am not anti-NFT. I'm invested relatively good, fairly well in digital assets and NFT programs. And I believe that there will be some very serious long-term opportunities. But what you don't want to necessarily participate in is just a shield program where you look and you see there's no community behind it, and there's very, very little substance other than people saying, hey, look, it used to be 1 ETH and now it's 2. That's the one to avoid entirely. And also, personally, I would avoid anything that looks like a bargain but has no plan in general.
So, Jeremy, I got a question for you. Third
No
time's
comment?
a charm on our show. I'm like, well, this is about that. I mean, my comment is I agree almost with everything that he just said. I mean, I think the NFT space is going to burn. But my question really is to focus on the same question you asked.
All right, Bane.
Jeremy came on.
I'm going to burn the NFT space down.
I'm not going to burn it down. Point to make, right? Jeremy came on before there was even NFTs. And we were talking to him. Well, there were NFTs, but nobody gave a shit about them. He came on and he told us about how when he puts his money in something, he expects it to 10x. Right? He expects it to 10x over a certain amount of time.
10 years.
Right? 10 years. Yeah. And I think that is a reasonable expectation. And we were talking about your Pokemon set, right? And you thought it was going to be $1 million set. It was going to take maybe 5 to 10 years to get there. You know, it was $100 and something thousand set when you bought it. Obviously, it's had some ups, some downs. Well, we don't need to talk about the Pokemon set, but the point to be made is that you had this thought process that you're going to put something in something you expect to 10x over 10 years. Maybe it'll take 5, but 10x in 10 years. That's less than 10% a year with compounding interest, right? And I want everyone to understand this, right? And then the question. I'm 45, Jeremy's 48. We've been through a couple of cycles. No one listening to this wants to hear from us. They don't. They say that
they actually tell me they listen to me.
Youth is wasted on the young, but sometimes experience is wasted on the old, right? Because youth doesn't care about our experience, right? Just as we think that they're wasting their youth, they think we were just dumb and didn't actually see anything and can't really learn from what we saw. You didn't pull 10x in 10 years out of your ass. You didn't say this was, it's a bug. But cautionary tale from me, and I'd love to know what you think, is this. If you are on Twitter, if you are in the NFT space, if you are in cards, if you are in almost anything, you undoubtedly will see some youngster say, I'm investing in this because it will 10x in the next 6 months or a year. And if it doesn't, I'm not putting my money in it because I can always find something that's going to 10 or 20x this year. Right. And what's funny about it is that comment to me, to you, it has to be laughed at. It has to be something that you say, are you insane? But painted against the landscape of the last 2 years, it's not insane. Because there have been so many of those 10x opportunities, 20x opportunities in the last couple of years, you almost didn't even have to have fundamentals behind it. You just had to be in it. You had to be involved in it. You had to be in that new evolving space. Right? And if you timed it, you could 10x if you were in cards. And then you rolled from cards to Top Shot. You rolled from sports cards to Pokemon, from Pokemon to Top Shot, from Top Shot to Bored Apes and the other NFTs, to V-Friends, to World of Women, to whatever the hell it is now. If you were in Omi, if you're in the Vive stuff early on, if you're in the Candy, you're in the Whack. There has been this crazy amount of new things. And hell, you could even say ticket stubs, crypto, whatever else it may be, right? I mean, VHS, right? figures, Star Wars sealed. Who the hell? There
Frick,
are
are you
so
just
many.
looking around the office and naming things?
No, dude, but I'm just, yeah, exactly. I love lamp. But point being, right? Like, it's never been like this. Can you remember another time where we've had a 24-month period or a 36-month period where it didn't matter, you threw a dart and 10x'd?
No, it's a little frenetic. I mean, it's
They
a
printed
little
a lot of money,
frenetic.
Cage.
What?
What's
They
that?
printed a lot of money.
They printed a lot of money. It
I don't
helped.
know why people can't wrap their head around that simple but yet extreme concept. They printed 50% of the entire circulation of money in the last 24 months. There it is. Like, sorry, Jeremy, like, you're much wiser than me,
No,
but
no,
I
no.
actually just stay right there. Like, if
Yeah, but
Panini
they've
doubled
printed
their
money
supply,
before. They've printed money
they
many times before. They've printed money.
no,
It's 50%
not
now
nearly.
because of the amount. But yes, during Carter's administration, inflation was like 3 times what it is now, right? And taxes were like over 50%. So trust me, there have been other times where by volume they didn't print as much. But remember, the economy overall was significantly less than what it is now. They printed plenty of it, not in volume, but they definitely have had instances like. But what I'm saying is, listen,
Jeremy, I
back
apologize
then.
for cutting you off. You guys are
No, no,
much
no.
wiser,
No,
but that
it's
was
not.
just where I'm
But
at.
see what I mean about
No,
the
it's fair.
experience is wasted on the old, right? The young. It's like, hey, Andrew's gonna find his 10x. Like he's gonna find. Or if I can't find a 10x, I'm gonna move my money into 20x because he knows. He knows it's about printing money. What I'm gonna say to you and to the people listening is, do you preach a little bit of pump the brakes because of this? Do
Yeah.
you say fundamentals matter? Right? I mean,
Well, the problem is there's a lot of things where there are no fundamentals to assess. So, I mean, when you're talking about a currency that's being driven by a community, that's there's nothing to assess the baseline. You can look at a market cap, and the market cap doesn't mean anything because there's no underlying profitability. The only thing that you can do with the currency is to look at the daily use and to say, wow, it's being adopted and it's being used. And if something's being adopted and used, and that means that other people are looking at it as a store of value. And if they're looking at it as a store of value, then if you call whatever it is money, a paperclip can be money. And if they're calling it money, it's money because it means that other people are utilizing it and they're using it as a store of value. Now, the big challenge is not Bitcoin, not Ethereum. I actually believe that there are really critical cryptocurrencies that do make life have real utility. Like I've used Bitcoin to make payments internationally that it really otherwise would have been a major pain in the ass to accomplish. I've used Ethereum to make purchases online of digital goods that made things a lot easier. The middle people that are playing are being a little piggish in terms of the percentages that they take. But the truth is,
Andrew's favorite thing. Frictionless. Crypto's frictionless.
Yeah, there's gas fees.
It's like a massage. It's so frictionless.
There's a lot of people that dip their hands in it. There's a lot of people that dip their hands in it. But in terms of the sheer number of things that people can invest in that have very little fundamentals is concerning to me. So, the sheer number of new entrants in digital assets is concerning. And the best analogy that I can use, and it was far more controlled, even though it was out of control, was in the 1980s in sports cards, where in 1983 you had 3 card companies putting out 3 sets essentially. But by 1986, 1987, you had, a dozen card companies putting out 60 sets, 70 sets with different brands, and the sheer number that they were putting out per set with no understanding of the underlying supply and demand. Now, the sports card market changed dramatically because of grading and because of forced collectibility with the limited editions and those types of things that came out. So the market is fundamentally easier to understand. You can see the number of graded cards. You can see at what grade. To me, it's a much safer market. You can actually create market capitalizations around various things. You can do that in also digital goods that are associated with licenses and say, hey, this is the only place I can get a Disney NFT, or this is the only place I can get and you can sort of gauge supply and demand. But in a world of crypto where there's 12,000 different cryptocurrencies and there are hundreds of NFT programs being dropped weekly, you have to be extremely discerning. And the idea of the 10x or 20x return sometimes ends up being the only place you go, because you even know intuitively that most of it has to burn. And so maybe if you get that one that has a 20x return, it can help you on the other 10 that went to fire sale. So I mean that's my mindset. And by the way, I am the farthest from anti crypto, and I'm the farthest from anti NFT and digital collectibles. I actually think that it's very interesting, and frankly speaking, the utility on a digital collectible under the right lens could be far greater than the utility of a physical collectible, where they could actually take that blockchain and change it over time to make it inclusive in gaming and other elements. So I'm not anti, but I am fully aware that the fragmentation and the overproduction is going to be very costly in the long term.
What has more value, NFTs that are decentralized on OpenSea or centralized NFTs like Top Shot or Vive 5 years from now?
I think that it depends. So I think Vive's got an interesting positioning because they locked up some of the most important brands in the space, and they're delivering against it, and they're not being piggish in terms of the way they're releasing. They haven't increased their numbers significantly, even though the number of users has skyrocketed. Whereas something like OpenSea, if you have 100,000 projects, they vary all over the place. The problem is you're going to have some really great projects that are pulled under because of so many, bad ones. And
like a systematic correction with NFTs will pull the good ones down for sure.
Yeah, they could. And if you look at OpenSea, what I would say is that, OpenSea allows for anyone to participate in mint. And there's good and there's bad to that. And it truly does celebrate the decentralization of everything. It does take the power out of the big corporates' hands. The downside is it does leave you wide open for value creation systems to be imploded. But I do believe that that some of the most well-situated NFT programs will perpetuate themselves and be in a very good place. Remember, something like Bored Ape Yacht Club, they are allowing, for better or for worse, for sharing of IP rights. They are putting you in a position where you may be able to rub shoulders with some extremely known people who can give you access that you otherwise wouldn't have. These are interesting concepts, but it's more like a country club than it is like a collectible.
It's a great example. The country club used it now because it's access. It's who's the other members. What does it gain you access to? What is it? What is the utility with a country club? Right? Can you get a private dining room? Is there a card night? Is there whatever it is in there? A game. The game is the golf you're able to play on the country club grounds, whatever it is. It's a very good analogy. I guess my thought, Jeremy, and we can get some rosier stuff in a second, is if you even take it out of crypto could just be one part of it. Take it out of even digital collectibles. You've been very good at rolling from one thing to another over the last however long, and you probably did that before this most recent boom. But I'd love to hear from you, right? I mean, you've made some really well-timed investments in spaces that are relevant to what we are talking about here, from Pokemon cards to, didn't you buy like fractional shares of like the Apple computer, like the first Apple? You're in all kinds of different alternate investments, right? Can it be sustained? And I guess my question for you is, go back a couple years, right? Go back 5 years, when there wasn't this frenzied pace. this wasn't happening, right? And I guess my question for you is, maybe it's because we're printing so much money, or maybe it's because this is now a renaissance of collectibles. I mean, maybe it is just a different time going forward. I'd love to hear your thought on it with digital being NFTs, with all of these crazy things that have come out. Maybe it is sustainable. What are your thoughts for the coming 24, 48 months? Do you think we go back to where it was 5 years ago and it's tougher to find this stuff? Do you think we burn some of the stuff out? Or do you think that there's just so much money, such a rabid, collectible base here that we've just changed the way, things are done, the kind of returns you can expect, the way people invest? I'd love to hear, because you obviously know what you're doing.
There's a few things. Number one, collectibles, even 3 years ago, were not taken nearly as seriously as a form of investment, even though they had tremendous returns, even though you could look and see that there were markets that were fundamentally traceable, and you could see, and it was very open in terms of, you could see the buys and the sales and the population reports and the grading and pricing. And that's being taken very seriously today. So I think when a category graduates from not being taken seriously as an investment category to being taken seriously as an investment category, it opens up that world for a lot of new investors, and some of them stick and some of them go away. And so what I would say is physical assets. There are more categories of physical assets that will be collectible. Whether you're talking about cards, or whether you're talking about tickets, or whether you're talking about VHS, whatever it may be, there are more categories that will be considered collectible and gradable. LPs. Oh, it's like Paige is opening something. He's opening the door to hell. Oh my God!
No, I'm trying to find it.
What are you finding?
I'm trying to find something here. Give me a second.
Jeremy, 567 episodes we've done this. It's a surprise every day, man.
I got it.
I can't wait.
I got it.
But
I think
here we go. I think that's essentially it. I mean, there's more. People are taking it more seriously. Look at that. That is it. Is that Pappy? What is that? Pappy. Oh wow. And what? How many years?
Ladies 15, and gentlemen.
15.
Yeah.
15. It's not a 23. It's not a 23, but it's a nice seal. It's like an older one. It's an old Weller. No clue. I bought this for $400.
When?
7 years ago.
Okay, today that's at least $5,000, I think.
So there you go. You're talking about asset classes.
Yeah.
Hey now.
You can see it. Watches, and it's just more categories of collectibles are being taken very seriously as investment mechanisms. Now, here's the thing that they have in common. The thing that they have in common is they were in historically they're in historic areas that cost money to manufacture. So when if I'm in the whiskey business, I have to have access to distributors, and I have to have access to manufacturing product, and I have to create a branding and all of the other stuff. I have to put up hundreds of thousands, millions of dollars. I have to do that in almost every physical category that you're manufacturing goods, and take the risk of running a business. When you're in digital, there's no barriers to entry. There's very limited barriers to entry. You can be an artist, and you can have access to programs that allow you to mix and match various art elements. You don't have to open a facility to warehouse goods. You don't have to open up customers. You don't have to have a sales team. You don't have to do all of those things. So that's the reason why whiskey and cards and all these physical collectibles have built-in mechanisms for that help limit scarcity. Digital don't have those limitations, and that's the reason why you have to be 25 times more careful trading and buying and selling digital assets. That's the reason why I personally like companies that deal with licensed goods, where they are going to definitively protect the underlying IP. And I like very proven communities of digital assets where you could say, holy shit, Bored Ape is selling for 85 ETH, and maybe that means it's $200,000 or $300,000, but at least you've got a lot of country club level access. I mean, you're getting utility that goes well beyond that. And don't forget, you've got access to the intellectual property, which has already proven itself as having value, not something that was just, developed. And by the way, there will be new NFT programs that pop up this year, that pop up in 23, that are also very viable. It's not over. It's just be very, very, very careful and understand the plan and understand the community plan and understand exactly their vision before you dive too deep into any particular program.
Apply only to crypto or digital? I mean, does it apply also to, like, I don't know, candy, wax, sports cards ones, or those are, you like that because they're licensed?
I like it. I like it if they're licensed. It protects value a little bit more, but it doesn't mean that the people who are managing the platform know how to manage it well. So what you have to have when you're talking about licensed stuff, the question, there's twofold question. Part one, does the platform know how to manage a long-term collectible? Do they have a long-term collectible strategy that, like Topps Cards Company, where every year they have scarcity that they build into their program, and you kind of have a sense as to what they're doing, and you know, you go from there. Or does it feel like they're just sort of like taking a shotgun approach, and it's just a blast and see what hits the target and what misses? And the latter tends to be someone who doesn't understand how to create long-term collectibility. And it doesn't matter what the underlying asset is, it creates risk. The second part is if you have a licensor who doesn't take digital as seriously as physical in terms of scarcity, and they do multiple deals across multiple different possible platforms, thinking that it's just a money grab, when the truth is that it can affect damage on their brand, on their underlying brand. So yeah, those are two things that have to be married, and only time will tell which licensors are going to be really get it, and only time will tell which platforms will really get it.
Can I ask a quick question here?
Yeah.
No. Just on the topic of building long-term collectability, right? How do you build? Because there's this kind of chicken or the egg. You want to reward early holders of your project by helping that floor price or the value to go up. But you also want to build long-term. So, like, let's say you run one of these projects. How do you build long-term collectability?
You're very clear about what the roadmap is, and you don't let demand take you too far away from what that roadmap was. And in the digital space, you do everything that you can to establish community and to maintain and drive it. So, for instance, if I'm running a basketball-oriented video program, I'm going to let everyone know what my next 5-year roadmap looks like, and I'm going to make it very clear that that here are the programs that I'm running, and then I'm going to do everything that I can to make sure that the distribution is fair and that there's not a huge amount of preference for those who have already won versus those who are just trying to enjoy it and be a part of it. I think if you can protect that and you can prove the scarcity, then you can provide more of a longer term success for the underlying collectible platform.
The case, the $3.5 million case, how'd that you're a Pokemon guy through and through. Any thoughts on that? Obviously fake, like.
Yeah.
Yeah.
I mean, I feel, look, I'm an entrepreneur, and I, was part of long-term in the toy industry, 20 years plus, on the brand side, and then as an executive, and then as an entrepreneur, and then we sold our company to essentially a holding company that does a lot of investments, something like a Berkshire Hathaway, and a company called Jazzwares, which is now where I am and in the position of chief brand officer. And in that particular universe, what I will tell you is your heart always goes out to an entrepreneur. And I look at like Baseball Card Exchange, and my heart sunk for them because their entire business model is verification. And I don't want to pass judgment, but you are judged by whether you get it right or whether you get it wrong, and you can be judged harshly if that happens on a spectacular scale. And a spectacular scale occurs either when the price of something is massive, or B, the person who's buying it has an enormous footprint. In this particular case, they struck the jackpot in terms of taking risks. It ended up in the hands of one of the most known people in one of the biggest deals, and played out on video. Now, I give the guy credit for showing up and actually being there to do it on camera and to say, and he did communicate very clearly why, his rationale as to why it was real. Now, with all of that said, I do think that there is the place for someone who truly understands and I'm not saying he doesn't. Okay, so I'm not saying he doesn't. But I am saying I do think there is a place for people that understand very specific genres to be responsible for the grading of those particular genres, or just don't do it. Like if someone comes in with a master carton that's a cardboard master carton, just say no. If you feel like there's risk. Now, in terms of this $3.5 million master carton, what I will say is that the underlying value of the boxes inside the master carton was not $3.5 million. It was less. Okay. So the reason why it was purchased for the premium was because of the unique element of actually having a master carton. That's like a museum piece all of a sudden. So you're paying an excess premium for that. So I feel bad for all involved. I will say, it does seem like it's going to find its way down the chain. At some point, someone's going to be stuck holding the bag in terms of having to pay off the person above them who made the purchase. So Logan, and then the person who sold it to Logan, and then the person that sold it to that person. At some point, someone pays the piper, either in court or in a scenario where they are not going to get paid back, but they're expected to pay out. And that's a gnarly situation when you're talking about this many zeros.
How did G.I. Joe get in the box, Jeremy?
What's that? How did
G.I. Joe get in the box?
Listen, G.I. Joe is one of the most clever brands of all time. So
he just found his way in.
Yeah,
that's what he did. He made it behind enemy lines. He snuck into the Pokemon territory.
I'll be honest with you. The G.I. Joe in those boxes is some real bad behavior.
Oh yeah, that's bad. It is bad news.
You can't even pretend like the boxes looked very flimsy. It's not like they went on eBay and bought empty boxes that looked like they were of high quality and then repacked them out with unlimited packs versus first edition packs. This was a bad thing. The way they did it, it was just awful. And look, if you're going to grade a $3.5 million or a several $1 million master carton, you might need to have technology that sees through that packaging to make out what's inside and to make out what's inside those individual boxes as well. I mean, it's so expensive and so important at that level that you almost have to kind of have, like, if we can see from a satellite what's going on inside a house, we should be able to see what's going on inside a box.
You think so? I don't know how that would happen.
No,
but there's a market opportunity.
Definitely, because they can tell you how many Charizards are in it. I love it. But let's go. Let's take it out of here before Jeremy has a great investment idea, and we got some Israeli tech company developing a scanning mechanism for getting inside of cases. But here's the fun. You ready? What do you think about Pokemon? Because we talked about that when you came in here. Just a quick couple minutes on it. Do you still think it is viable? Do you think it's still going to go? I will tell you, when we first had you on and you had just bought your set for what was just over 100 and change, it was running full speed. You wanted it to go 10x in 10 years, and you still have like 8 years, right?
Yeah,
and I'm sure it's going to happen because in the first year it went to 500,000 or 600,000, and then it kind of took a little bit of a step back. Where do you see it going now? And I guess throwing a little spice on, as Andrew likes to do, throw a little salt on. This whole thing he does. It's like a little sprinkle of some salt on there. Does this, especially for the first edition set that you have, does this case opening now permeate its way through the psyche of Pokemon collectors to say, wow, maybe there isn't as much sealed out there as we thought. And maybe some of the sealed that's out there isn't really what we thought it was. And it's better to have that slab, PSA, authenticated, you name it, the card itself. And maybe that, has an impact. Talk to me.
Well, I mean, as far as Pokemon as an overall brand, it's as hot as it's ever been in terms of a brand. That is one of the most well-managed brands I've ever seen. And talking about taking a long-term perspective, I mean, they're celebrating their 25th anniversary right now, but their roadmap is decades long. It's not a roadmap where they make short-term decisions or necessarily react to anything quickly. They are a long-term brand building machine. And Pokemon, I say that I'm biased, okay, because we're the global partner for Pokemon in the toy business, but also they invested in my company. After they invested in Niantic, they invested in the company that we sold. And so I have a very close relationship with that team all the way up to Mr. Ishihara, who personally signed off on the investment at the end. So my belief and investment in Pokemon was at a time where I bought the first edition set, all PSA 10. There's only 12 or 13 in the world, for a little over $100,000, $120,000, $125,000, or whatever it was. And so a year later, that same set was trading for six something, maybe 650. And so it's interesting when you gauge it and you really look at it right now, because recently a first edition PSA 10 Charizard on a traditional auction, sold with buyer's premium at about $250,000. And the Charizard has traditionally made up around 50% plus or minus of the price of the total set. So if you use that as a gauge, you say, well, it's the collectible rocketed up and has taken a bit of a soft landing. It's not a disastrous crash by any stretch of the imagination. If you look at the fractional share companies, I see a real serious opportunity for someone to come in and make some purchases over
Andrew,
and above.
Does this sound familiar? The fractional share of the cards that are out there. Remember what I was telling you? Jeremy, I told him this exact same thing maybe 3 weeks ago.
Yeah. Look, here's the truth. The truth is if you can go and if tomorrow, arbitrage in business is important. Okay. If tomorrow you could say, hey, I need, give me $10 million to invest and I can bring you $12 million in value in a week. I see that in some of the fractional share opportunities. There are some items that if they were sold individually, they would go for far higher than they are listed as a fractional share, because people just don't have the stomach to own a share of it the way someone would have the ownership of the whole thing. There are other assets that are higher than they would be if individually sold. And it just takes a discerning eye to recognize That, by the way, that's not what I expected. I expected fractional share to offer a benefit and a premium to everything, but that's not what I'm seeing so far. It's item dependent, and it's very interesting. But the Pokemon high-end first edition product that I've seen on fractional share has sold for lower than I've seen it sell on the open market to individuals. So I tend to like take a middle ground and say the truth is somewhere in between. And if that's the case, then rather than a 6 times increase, I'm probably at more of a 4. And I find that to be totally acceptable on any asset that I ever invest in after a couple of years.
2 years,
So,
4x. I'll
yeah.
take it.
Yeah, I'll take that any day. So, but I also actually have to say that, there's plenty of markets out there where it's just it's too hot on the secondary market. And that also makes me a little uncomfortable. Like, I like a market that is pacing along at a good, steady growth. And that's the way I feel about Pokemon. I think Pokemon, if you look at it 10 years from now, you'll go, man, remember when and again, this is not a promise. There's no promises. There's no investment absolutes. This is just my opinion. But I think it'll be a situation you look at it 10 years from now and you go, man, remember when it was just absolutely blowing up on the secondary market and the collector market? I wish I'd have bought then, because the soft landing is then followed by a long build by tens of millions of people who absolutely adore the brand over the course of time. Now, that is not necessarily the same case in every brand, but that's the way I look at Pokemon very specifically.
Cage, what was the idea? I'm intrigued now, because I mean, you have 10, 15 ideas every day.
When we were talking about me, I was going to bid on that Charizard that he's talking about. And I told you, hey, look, the price that it's at now, believe it or not, if you look at the fractional price of the set and the fractional price of the card that they have, that set, I would rather buy the set. You buy the set, take the $250 off, and then you're getting the rest of the set. It was like $80-something thousand. It was a ridiculous thing. Like, you do like a Gordon Gekko, you come in and you raid the company, you sell the assets off, and you're going to make more than what it's currently trading at for fractional.
As our podcast grows, I could see that role being great for you as we start acquiring other networks that want to go out of business, other content creators. I love it. I can't wait till you come in with like the paintball gun, like Ari Gold at Entourage. Man,
it'd be great.
But I'm serious though. I really do believe armed. Investment funds have billions and billions of dollars. They give a very discerning collector $25 million to play with on some of these fractional share, and you could turn 25 into 30 on the secondary market very quickly. There's a 20% arbitrage that is just waiting to be picked off, and it's hard to fully understand because other items do trade at a premium. So, I guess it falls into that whole man plans, God laughs. That old
exactly.
Like
life's what happens when you're making plans for your life. That's what I was telling Andrew.
Exactly.
But I think part of it is that on those smaller ones, the reason why there's a 20% arbitrage there is because you can only amass so much in the fractional, and in order to take it off the platform, you would have to pay a premium to get everybody to vote to allow you to take it, and that cuts into your 20% arbitrage play.
Right. And then on top of that, I believe then there's also I also believe that you have to pay an upcharge to the company that is hosting that particular. So it may be a 20% premium or whatever it may be, because remember, if an asset sells for $1 million, I think only a certain percentage of that is paid out. So maybe 900, maybe 800. I don't remember what the number is, and it depends on the platform we're talking about, and we're not naming any particular ones. So there are many, 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 and the rules are slightly different depending on which one.
Some of them, the holders get less. Some of them, there's a buyout premium. The person who's taking it off the market pays like a buyer's premium.
You know what I'm excited for? I'm excited. So remember Pokemon Go, where people kind of walk around the world? Like that with NFTs attached is going to be really interesting, right? Like if you...
Yes.
that was our first like kind of mainstream entry into this whole AR. Is that what they call?
By the way,
Like
that already exists. The Panini Dunk app has, the digital cards and not exactly. My son will walk around the neighborhood, and if you walk, oh, here's a card, here's a Zion, here's a this, and he'll say, "Daddy, we have to walk here," and I'm like, "That's the subway 6 blocks from our house." He's like, "We got to go there. There's a John Morant."
and you own it if you
there.
grab it.
And you get it. You grab it and you own
That's
it.
really cool. That's really
cool.
cool.
Yeah.
Hey, Cage,
100%.
I have a question for you.
Shoot.
Because this is one, I follow a lot of different markets. Here's a market that I did not follow very much, and I'll tell you why. So NBA Top Shot,
mm-hmm.
I bought a few assets, and then I became personally disinterested.
Sounds like 90% of the people who bought a few assets. Exactly. Shoot.
I became disinterested for a couple reasons. Number one, there were a lot of things that were not available to me. So there were drop after drop after drop that I didn't qualify for various reasons. And that almost entirely turned me off. I was done. But number two, the queue wasn't necessarily, you didn't need to wait there for an hour. Everything could be randomized and dropped right away. It was too time consuming for me as a collector.
Yeah.
So what is the post? Where are they at now? What's going on, and have they found their?
So you did a very good job during this episode of talking about how you build up a digital platform with a community and what you do with the roadmap and the whole 9 yards. I think they've done a couple of really good things, but it did a little too late and it wasn't announced. It was more like a surprise, and it is to the benefit of their most loyal folks. So they did release this one set with a master challenge, right? It was this Cool Cats set that they had. There was a master challenge to it, and they added in this utility to it. If you completed the whole set into the master challenge, it was a separate Discord that gave you access to like the CEO of Dapper. And it turns out that became sort of like a master key to getting into queues and getting into other drops and, going forward with other, hey, they just released the UFC. And I'm pretty sure Sunday was the first public drop of it. And we can talk about that in a second. But on Friday, they did like a private beta, stress test to only the people who were in that, they call it the 9 Lives Lounge for the Cool Cats or whatever the heck it is. So they did figure that part out, that country club aspect, that whole, like, if you're in it and you're one of our, big time heavy users, the whole VIP, we're going to take care of you. There's utility built in and all that stuff. But I got to tell you, Jeremy, they went way too far over their skis. And I think your experience with it is probably the experience of 90% of the people. Because you tell me if I'm wrong. I haven't got into VV, I haven't got into Candy, I haven't got into Wax, but I'm thinking about getting into all of them because I like a little bit of it all, right? Thinking about getting into all of them. But what I've noticed is that if you were in Top Shot early, if you were on Candy early, if you were in the NFT space, on whether it was Rarible or OpenSea or whatever it is, if you got into that stuff early enough and you beat the crowd before the chart of user adoption went like this, if you were in it while it was still like this, Top Shot, if you got in it by February, but not March, if you got in it by the beginning of February, but not March, you made money because you were there before the explosion. And then the explosion happens, and it's very hard to invest in it, to make money in it, the whole 9 years. There are people in it who still believe it, right? And they have a really cool UI, UX. It's like the music, the sounds, the pack opening. It's very like fancy. It's very nice the way they do it. But the problem that I had with it is even with the queues, even with the craziness, they literally just became the Fed. And they just started printing more money than had ever been printed before. The UFC one, for example, I think they sold it out. But it's their first drop ever. And for $50, ooh, a little Star Wars? Oh, what's that? We got an alarm? Do we got to go? So $50.
Do we have the rights to use that music in our YouTube
I don't know what
video?
it was.
You may have to cut that out. I something did hit in the background that reminded me I needed to join something else, and I just hit cancel. But
you can join.
I think from now on, I think from now on, I need to make it less grandiose. My intros into various things.
That's kind of cool, though. No, like when you
it's
show
nice.
up, it's an appearance. That's how I
It's
would want
Jeremy
to show up.
walking in with Ric Flair's robe. He's walking in the Nature Boy, Jeremy Flair.
Yes, thank
I
you.
think you've earned it. I think you've earned it.
But keep going, please.
No, but the point is they just kept printing. They kept turn the machines back on, right? Like Randolph and Mortimer Duke, right? And this UFC one, they just printed literally. They had $50 per, and they did 100,000 packs with 3 per pack. And I'm going to tell you could buy up to 5. They sold out. That is a legit $5 million grab for a product that's the first time they've ever dropped it. And I think most of them were out of like 25,000 of garbage players, garbage, fighters. They had a real random, like you had a 0.03 chance of getting 1 out of 75, and that's the chase. Obviously, I didn't get that, but
it's tough, Cage. It's a double-edged sword. The company needs to make money. They also want to cater to the masses, where you could come to their website like you would to Target and take a pack and be able to buy it at all times. But then for that to happen, you have to kind of oversupply the market. Right, it's this seesaw that you always go through, I think, when you're creating a project. You want to keep the price low, so have enough supply, but you also want to create enough scarcity so there's not too much demand. And I don't think it's as easy as we think to find that balance.
I'll tell you this. What you just said is right. And it depends on what your objective is. If you are in it to get in and out, and maybe as an executive, you got a lot of stock and you just want to get the hell out, then, and you maybe don't have the ethics that you want to actually sell something to somebody else that has long-term value, you shill the hell out of it and you get out. But if you have a long-term objective and you actually have ethics, then you use all the restraint that you possibly have if you're managing a collectible brand. And I'm not saying I'm not pointing fingers to anybody, because I'm not saying this one did, this one didn't. I'm saying, as someone who's created a lot of collectible systems, you need to leave a shitload of money on the table as the manufacturer if you want to have longevity in the space.
It's tough to have that balance, though, right? Because here you are complaining, right, that you couldn't get in any of the drops.
No,
not complaining.
I'm not complaining I couldn't get in on the drops. I'm complaining that unless I had collected a certain amount of a thing,
right,
I wasn't qualified.
Right. Yes, I get it.
And I'm also frustrated that I had to sit there for 30 minutes when it's a digital thing that could just be blasted out via email. Hey, congratulations, you qualified this time. So those were the things that turned me off. But again, that's being very specific towards that particular. That's why I stopped collecting that one.
But Jeremy, it's also so this middle ground. I'm curious what you would think I'd do in this situation. It's okay. You want to create a product that customers want to buy, but you're also beholden to the stakeholders who are the people that are providing you the license. So you have to make them money.
Yeah, but there's so much money here. And I can put it in perspective and just say this. In the toy industry, you're dealing with the biggest licensors in the world, just like in this digital space. And if a toy sells, 700,000 units and it's a $30 item, then you're talking about a $20 million piece of business. But the cost of goods exists, and there's a selling price to a middle person and all that other stuff. And let's say after everything's net, your profitability on that item is 15%, 20%. Okay. If you look at all the public toy companies and you look at their percentages of profitability at the end of the day, you'll find that maybe that's accurate. And so that $20 million retail item, you sold it in for maybe total of 14 million and you're making 20. So maybe you make $2 or $3 million. You've worked all year your ass off for that to happen. Okay. In the digital space, that $5 million is on a good that has only design against it and no physical manufacturing. And it's almost all profit. So that $5 million may be at an 80% profitability. So what I'm saying is, and you're selling direct to consumer. There's no middle people. You're paying a royalty. Use restraint. That's my message to everybody that's selling digital collectibles that are licensed, not just one or the other. Use restraint. Don't be a pig. And that is not a message to any particular one. That's just a message to everyone that's doing this.
Just to give you guys news, I mean, we could sell out our Lucas Tigers mint any day, but we're actually going to practice that. We've talked to our community. We've wanted to learn what makes a successful NFT project, because at the end of the day, we're running our own NFT project. We want it to be the country club that people want to join. We want to take care of our members, and we've tried to do that. We got an SGC sponsorship in 2022, nice. And in the sponsorship, they included 50 free grading submissions every month. Wow. So we're trying to give those back to people that hold our country club membership. We did a 1-month sponsorship and made a little money and kind of did a reward program. So that gives me confidence that the decision that's coming next, a few of you guys know because we've been talking about it, the Discord knows, but to show restraint that helps a lot. That helps a lot. Cage, any final words?
Let's give Jeremy a tiger. Does Jeremy have a tiger yet? Let's make sure Jeremy has a tiger.
I don't have a tiger. Hold on.
Give him a tiger. Let's give Jeremy a tiger.
Done.
Wait, let me see. I'm going to OpenSea.
We're going to send you one. We're sending you one for being on the show. Don't buy one. Don't be that guy. Well, we're going to send you one.
Lucas Tigers.
If you want to buy one after we send you one, you can buy one.
So here's the cool thing, and I think most of our holders have loved this part. The art was by Leah. It was Cage's daughter.
Oh my God, that's great.
So as much as there are projects that probably, more professional. You had an artist who's been working for Blizzard.
He started off the show by saying the art doesn't really matter. The community does. That's Jeremy's line before we even got into this.
It sounds like you're talking to me from a mountaintop. It's like a shaman or something like it.
I am. I'm about to bring down my 15.
Cage Almighty is actually what it sounds like.
10 commandments for all to obey.
The art is by Cage's daughter, and a lot of our holders are like first-time NFT buyers. A lot of them, they never owned ETH, and don't worry, they got in at ETH at 1,800, guys. So we're still holding on for dear life. A lot of people that never owned an NFT, and it was actually inspired in a lot of ways by Yam, who created that. He created that Elon Musk card in the SGC holder, and then created the counterpart to it in the NFT space. And we're like, how do we bridge this gap between sports cards and digital collectibles? And our community supported us, and we really, really appreciate it. So, Jeremy, thank you for coming on. Any final words, Cage? We'll absolutely send you a tiger, Jeremy.
That's awesome. Thank you.
Yeah, we just need your wallet. You need to message us. But listen, how about this?
Yes.
One space that people might not be looking at that you think might be hot. One space that you think, you talked about things that have been overblown. There are spaces that are overblown. You got to be careful. What's one space that's been a little bubble? Beware. Caveat emptor. And what's one space where you think, all right, this. And if you don't want to give away some secrets, give you a third or fourth best one. Don't give away your best one.
No, I don't mind. I've never minded. I mean, listen, I think.
Well, we love you.
I think I've been very clear that I think that digital collectibles have a real place, and that I'm pro. I'm invested in it. But just to be very discriminating, more than any other area, be very discriminating. In physical collectibles, I think anything that could be graded, but has not been graded, but there's a large collector base, has potential. And a couple areas that I think about are like LPs, like sealed LPs. I think that there's going to be an interesting future there, in my opinion. And I would say that something
Is that vinyls? Is that vinyls?
Vinyl.
Yeah.
That's literally we're talking about
45, 78s. Mm-hmm. The white album. I have a sealed white album. Jeremy, you know what I bought the other day? 1968 sealed cassette of the Graduate soundtrack I just bought on eBay.
That's awesome. See, I love that.
For like $40.
I mean,
they're going to grade those soon.
So look, I mean, tickets are interesting. It's discovered country a little bit. VHS is interesting. It's discovered country, but there's other areas that are gradable. And the one that I have a personal stake in, not because I'm overly indexed, but I think action figures have been tremendously overlooked. in terms of their collectible value because each action figure space has its own community. And the grails tend to be way lower than the grails on the card side. They're more difficult to grade, and but I see a lot of potential there.
Do you remember 40-Year-Old Virgin?
Yes.
He was doing the toys. He was going to sell them on eBay, and it's like, that's not the $6 million man. That's his boss. It's much more rare.
Yeah.
Right? So I mean,
Yes.
it's much more rare now. That's his boss.
So like
Steve Austin,
like a Beatles 1969 vinyl.
Yeah, that sounds great. Yes, if you could
it's gonna be
find
tough to get sealed vinyl.
if you could find something sealed, if you could find vinyl that's sealed, attached to an incredibly meaningful record or brand, I think that's, to me, it feels like a safer bet because you have to think about it. It's like cards. They're highly gradable. Because they're so standard. Like, unlike even action figures where they come in a zillion different sizes and scales, LPs tend to be fairly standard. And so I really like that category.
I do. That's interesting. And they have a lot of displayability too. So one thing that I've tried to learn, like I'm 32, I'm trying to learn practice, maybe is a better word, patience and thinking long-term. And there's a book, and you touched on this with the roadmap, which is just a business plan in business world, right? And how the Pokemon brand has this very thought out business plan roadmap. And in America, we think in very typically, I think, short term. In Japan, I've learned, I think the book is called The Mind of a Strategist, is like the art of Japanese business. Their business plans are no shorter than 20 years. So you don't open a business in Japan unless you think 20 years out. And it's just like, I think as a collector, as you evolve, as you learn, like you start by flipping and coloring up, right? We all love that rush, but like eventually you want to evolve and think like the greats. And I think they think in very, very much different relationship with time, in my opinion.
Oh, for sure. It's an incredibly, well, it's also a very different relationship with one another. Having spent a lot of time, in that culture, it's less about the individual and more about the community, more about the national, more of a country-oriented scenario. Like, for instance, I went to a Pokemon regional championship. I think it was in Fukuoka, and we went into the stadium.
What did you call Andrew?
Yes, Andrew.
Fukujama.
Yes, there was like 12,000 kids in the stands. It was packed, and they left, and you couldn't find one discarded piece of food. You couldn't find one napkin. You couldn't find any. It was as if you didn't even need to go through the place and clean it up. And if you go to a game with adults, much less children in the U.S., you find that it's like a disaster zone after a game. You've got to have a team of people cleaning that place up.
Yeah, and like tailgates, like tailgates in America, where you bring all your own stuff and then you leave all of your own stuff.
Yeah.
So two things to say about that. Were you there with a bag full of cash trying to buy like a trophy card? Were you trying to buy like a rare Pokemon trophy card?
No, because
so that's one.
No, church and state for me. If I am in a professional capacity, I never let my own interests go beyond.
I like that. Company. And Andrew's idea about 20 years with the Japanese stuff, some of their businesses do better than others. I mean, they obviously don't know how to grow trees. 20 years, they grow some of these trees, and they're like 2 feet tall still. These bonsai trees. Like, what are they doing? With 20 years, this thing should be like huge. It should be like the size of a house.
See,
so they don't know what they're doing.
I think there's a 5-minute. I think you could turn that into a skit. I do. I could see you turning that into a skit. Now, I don't know what happens at the end. Like, I don't know if you still have a career, but it could be a
correct.
Skit.
Yeah, I'm canceled. Exactly. I'm canceled by the end of that. Exactly. You gotta love it, Jeremy. We're gonna have you back on. I want to have you back on every day. I love
Yeah,
this, man, because
back.
I come in with a little venom, I come in a little fire, the crypto market's down, but it doesn't make a difference. After you talk to you for an hour, you leave knowing that there is more than one way to skin a cat, right? Be optimistic, work your plan,
I
right?
thought you're
And there's
not that
always another
invested in
avenue.
crypto. I thought you're not even that invested in crypto.
I'm
So
not,
why
but
should
that's
it
not
bug
it.
you?
I'm not, but the people's behavior is what upsets me. The way people react to this, how, they want to kick people while they're down. I don't enjoy that.
Yeah.
That's
His
not the way
kicks
that
are not even
I
that
kind of
hard.
try to hold
Relax.
myself.
He doesn't kick that hard.
I think the
Well,
real
Jeremy, we love you.
Yes. Thank you.
It's
So
chaos with this guy. I love you, Cage. Jeremy, I love you too, brother.